So I thought this was quite a nice spot to record another video for you, and this one's about the action in the gold markets. Now, there's a famous maxim: put 10% of your net worth into gold and hope it doesn't go up. And never has that maxim, that saying, been more appropriate to now. This week gold was up there retesting its old highs, and according to my feed, $2,075 an ounce was the old high for gold, printed in August 2020, and we touched 2,070 this week. So 2075, 2070, and I suppose there are three scenarios we are currently looking at, which you get to when you get to pivotal price points such as now, especially around all-time highs. And firstly, there's the possibility that we're forming the mother of all double tops. Perhaps Vladimir Putin holds up his hands later this afternoon, says mea culpa, withdraws his forces, and both the war and the currency wars come to an end. The West, meanwhile, raises rates to a level that reflect the new inflationary reality around us. Governments tighten their belts, the blob sheds its blubber and re-emerges as a lean, fit fighting machine, and fiscal rectitude returns. Okay, so none of that is going to happen, but we could still do a double top, and until we go above the old highs and stay there, the double top scenario is in play. There is excess across all commodities markets at the moment, and let's face it, a retest of the old highs is an obvious place to stall. So that's one scenario. Since that retest, we've now come off about $70. Not one I like, but it's possible. Scenario two is the old from false moves come fast moves in the opposite direction. And that's a surprisingly common situation. The price moves above its old high. It looks like we have a breakout, and then wallop, it turns around and sells off. We saw a classic example of this. From false highs come fast moves in the wrong direction. We saw in Bitcoin last year, it went to $65,000 in April, sold off 6 or 7 months later, went back to that level, went above it, 69 grand, looked like we had a breakout, and then wallop. Bitcoin had one of its monster 50% plus corrections. Now, many years of false promise and disappointment with gold have perhaps turned me into a cynic, but I have to admit, it's a possibility. Gold breaks out above $2,075 to somewhere in the 2,100s, and then we get the correction. We're in a situation where pretty much every metal is flying. Parabolic moves are fun while they last, but they don't last forever. And at some point, the parabola is going to reverse and get ugly. Now, I'm so caught up in the mania, I can't see what it is that's going to trigger such a reversal, except for the fact that they've just gone up so far. But often the trigger only becomes visible after the event. But I'm old enough and wise enough to know that bull markets, particularly ones in gold, end. And then there's the third scenario, and this is the one I have to say that I find most likely, which is that we go higher. The inflation was coming anyway. Years of money printing had made it inevitable. A decade of underinvestment in metals and energy meant that higher prices were baked in anyway. The war has only accelerated things. But whether it's tin, copper, zinc, palladium, silver or gold, they're all going to cost a lot more than they used to. That's not to say they won't correct, they will. But when the next bear cycle comes, they will correct to levels much higher than the previous bear. This is a secular bull market, and structurally higher commodities prices will be the result of it. I remember Charlie Morris of Bytree arguing, it would be a couple of years back now, that 2,700 was a reasonable target for gold. And those kind of levels, I don't know, they feel right to me. You can make any kind of argument. It's easy to just make any kind of argument to justify price. You could say gold is an analog asset in a digital world. It's as irrelevant to modern finance as the horse is to modern transport. Gold goes back to $12.50 an ounce, and the only buyers are jewellery manufacturers, Indian wedding guests, and the odd crank who hoards Krugerrands. Or you could say gold needs to reach the kind of price where the US can settle its debts with its gold. The US then audits its gold and we discover there's none there, or there's nothing like what we thought there was there. China, meanwhile, declares that its real gold holdings are in the 30,000 ton region and uses them to back its new digital yuan, with which it plans to replace the US dollar as the international reserve currency. Then gold goes to $50,000 an ounce. So let's go for something in between. Gold remains an important strategic asset. We are in a currency war. Too much money has been printed. Russia, I don't know, let's say it takes parts of the Ukraine, leaves the rest, declares victory, and we get some kind of ceasefire followed by one of those permanent insurgency situations in the taken areas, which the West mostly turns a blind eye to because that's the easiest way of avoiding a conflict. Gold goes to 2,500. I don't know, but that's where I think I am with this. Gold goes higher, but it doesn't go nickel high. But wise old owls who were around in 1979-80 as Russia began its disastrous invasion of Afghanistan, and there are rather a lot of parallels to today, and the Iranian hostage crisis was in full throw, will alert you to a fourth scenario, and that's one that I haven't outlined. And that is that gold goes parabolic. Back then, gold, over the space of about 14 months, more than quadrupled from $200 an ounce to $850 an ounce. The last month in the move saw it go from $400 to $850 in barely 30 days. And markets were less volatile then because of less inflation, less money printing. So such arguments bring targets like $4,000 or $5,000 into play. These are markets and they are mad times. Anything can happen. Prices can go up as well as down, as they say. I'm not ruling out anything, but I don't think a target in the mid-2000s is unreasonable. And that there is a very, very bullish cup and handle formation, after all, that's formed after over many years. If you're looking to buy physical gold, coins or bars, let me recommend Goldcore in Ireland, with whom I have an affiliation deal. They're competitively priced. You get to speak to a human being, and you can take delivery or store it safely, allocated to you at vaults in Zurich in Switzerland, Ireland, Singapore, Hong Kong, United States or the UK. And I'll put a link in the comments below. But that is about all I have to say. Thank you very much for watching. I hope you're enjoying this lovely view of the French Alps. Please subscribe to the channel. Please subscribe to my Substack. I'll put a link to that in the bottom. And I'll be back with another video very soon. Cheerio.